Hello everyone, I am Ashwini. My topic is fiscal policy and deficit financing. First, we understanding what is fiscal policy. It is that part of government economic policy which deals with taxation, expenditure, borrowings, and management of public debt in an economy. In simple, fiscal policy means public expenditure and its tax policy. In short, it refers to the budgetary policy. Fiscal deficit and fiscal surplus. Fiscal deficit it occurs when government expenditure is more than its revenue. Fiscal deficit is equal to total expenditure minus total receipt. Fiscal surplus. Fiscal surplus is opposite to the fiscal deficit. Fiscal deficit occurs when the government expenditure is more than expenditure. Fiscal surplus is equal to total receipt minus total expenditure. Fiscal policy tools like taxation, public expenditure, it includes under taxation, it includes determining taxes to be charged on income, goods and services. Public expenditure, it includes subsidies transfer payment like salaries to government employee, welfare program, etc. Types of fiscal policy like contractionary fiscal policy, expansionary fiscal policy. Contraction fiscal policy it will help to reduce the inflation in the economy. This involves reducing the government expenditure or rising taxes. Expansionary fiscal policy this involves a tax cut and an increase in government spending to boost economic growth and decrease the unemployment taxes. This can also lead the higher budget deficit. Here the government levied on lower taxes, increase the government expenditure. Next, objective of fiscal policy. Main objective of the fiscal policy to earn the revenue. Next, increase in employment opportunity. Lot of investment has been done by the government on infrastructure. It will help to increase the employment opportunity. Main objective of the fiscal policy to control the inflation. In fiscal policy, it will help to control the inflation in the economy. Next, stimulate savings and investment. Fiscal policy will help to stimulate savings and investment in an economy. Next concept, deficit financing. Deficit financing. When there is a budgetary deficit, a gap between revenue and the public expenditure, deficit financing will start. When receipt of revenue and capital accounts over the expenditure account, deficit financing will appear. In simple, deficit financing means when the expenditure is more than the revenue, that time deficit financing will appear. Objective of deficit financing. Main objective of deficit financing to reduce the poverty in the economy. Next, to upgrade the infrastructure of the country also. Next, to create the employment opportunity. Deficit financing main objective to create the employment opportunity in the economy. Next, to mobilize resources for planned economic development. Government are infuse the deficit financing system. It will help to achieve economic development. Uses of deficit financing. Main use of deficit financing to increase in flow of money in the economy. Next, reduction in the poverty. Deficit financing will help to reduction in the poverty. And it will help to reduce the poverty in an economy. Creation of infrastructure also. Deficit financing will help to create the infrastructure in the economy. Increase in the income, employment and output level. It will help to increase the income, employment and output level. Next, inflation is maintained. Deficit financing will help to maintain the inflation in the economy. Thank you.